Welcome back to News in Focus. Now, some economists are expecting economic recovery to continue into the final quarter of this year and throughout next year, following more signs of improvement. The country's economy expanded by 0.5% in the third quarter, marking the fourth consecutive rise in economic activity. Of course, as I mentioned earlier on, this follows a revised increase of 0.9% in the 3 months prior. Joining me now to take this conversation forward, I beg your pardon, I'd like to welcome independent economist Duma Gqubule. Duma, absolute pleasure having you on. Thank you so much for joining us.
Thank you so much for the invite.
No, it's an absolute pleasure. I think, Duma, just your initial reaction to the 0.5% increase. I had Stats SA before you came on. Of course, they painting the picture of it being a positive outcome. How do you see it in this regards?
Okay, the first thing I want to say is that there's this narrative that has just suddenly appeared that there's green shoots in terms of our economy, and it's based on better vibes. We've been taken over the FATF grey list. We've had a ratings upgrade, but we're still in junk territory. And people believe that somehow those two factors will get our economy moving, but that's not how it works. So where is the evidence? In the third quarter, our GDP increased by 0.5%. So that's the first thing I want to say. Now, if you look at it over 9 months, the beginning of the year, our GDP increased by 1.2%. So that means that for the rest of the year, we'll have a similar rate of growth. That is below population growth. The long-term average from 2009 to 2024, average annual GDP growth is 1.1% over those 16 years. That is a shocking economic performance. If you look at from 2025, GDP per capita will be lower than it was in 2007. That is 18 years of declining average living standards. And if you look at the forecast for the next 3 years, the average GDP forecast, which I did from the major institutions, is about 1.5% a year. So what I have to say is that this chronically low GDP growth for so long is not normal for a country that is not at war. The average emerging market, 155 of them, over the same period since the global financial crisis, they have cruised to annual average GDP growth of more than 4%. Emerging and developing Asia, 30 countries, they have cruised to more than 6.3% growth. So I want to ask, what is so difficult for South Africa that it finds it impossible to increase this GDP growth? Because this is a uniquely South African problem. In the rest of the world, we don't have this problem. And the number one crisis we have in this country is the unemployment crisis. 12.5 million people do not work. The unemployment rate is about 42.5% in the third quarter. And this is the second highest unemployment rate in the world. And if you compare it with the rest of the world, the average annual GDP growth, the average unemployment rate in the world is 4.9%. And the last time I looked at the ILO website, more than 80 countries had achieved full employment, which I define as an unemployment rate of less than 5%. And finally, last month I was in October rather, I was in Malaysia. They have similar country, emerging, developing countries. They have an unemployment rate of 3%, and 15% of the workforce are foreign nationals, according to the World Bank. So that is the kind of situation that you have in other countries, and we can't continue like this. Something has to change.
Here's the thing, Duma. At the start of the year, before the South African delegation went to the World Economic Forum, there was this picture painted that South Africa could get to the 3% GDP growth that it's targeting. Now, I don't know when that actual time period is going to be, and I think that's where the cause for concern comes, because no one really knows when this 3% GDP growth rate that they are targeting is actually going to be achieved. But are we even getting closer to that, Duma? Because it kind of feels as if it's a slow walk towards that actually happening.
100%. So at the time I looked at that 3%, it was based on improbable forecasts of private sector investment. And if you look at the IMF's forecast for it was to be achieved by 2030. First thing I have to say is that 3% for 2025 or 2026 is completely inadequate for the scale of the problems that we have in the South African economy, I estimate we need 4% GDP growth just to create jobs for the annual new entrants into the labor force over the next decade. I estimate 800,000 people enter the labor force every year, and we need 4% to create jobs for them, let alone the 12.5 million who are unemployed. Now, the 3%, if you look at all the IMF forecasts for 2030, they have us getting to 1.8%. So the people who say that things will improve, we can't improve based on vibes alone. They have to reflect in, once something is real, it reflects in the GDP forecast of South African institutions. Once people believe that this is going to happen. And the final thing I have to say is that the government's own forecasts tell us we won't achieve 3%. The Reserve Bank's forecasts, the National Treasury's forecasts say we will not achieve that. And the Treasury's forecasts are always optimistic, and they always do not meet their targets. Yeah.
Duma, when you listen to President Ramaphosa, when you listen to the business community, so I had the opportunity to sit within the B20 for the 2 days that the summit had happened. And, you mentioned the word vibes, and that is exactly what had occurred at that time. A lot of vibes that were happening. How much should we take into context South Africa's hosting of the G20, the B20, and whether this is just a euphoric moment rather than the realism that we are going to see in the future?
We've had so many outbreaks of these vibes. So the first outbreak of these vibes was the New Dawn, which I subsequently called the New Yawn, because nothing happened with those vibes. Then the second outbreak of these vibes was after the Government of National Unity in 2024. It wasn't based on anything tangible. And the key thing about each time these vibes come across, these outbreaks of unwarranted optimism, is that it's not based on anything concrete that you can measure. And then now we've had the third outbreak of these vibes with the G20, with the grey list, with the upgrade, but there's nothing concrete. You must show me the concrete evidence that there will be green shoot recovery.
Duma,
and I read this paper by the speech by Adrian Enthoven. He says the economy has turned the corner. And then the statistics he used to show that the economy has turned the corner, not one time in 19 pages speech does he talk about jobs, number one. Number two, the statistics he mentions, like the stock market has got very little to do with the lived reality of South African people. The stock market, my calculations, almost 80% of the stock market assets have got nothing to do with South Africa.
Duma, I know that obviously we don't live in a bubble as South Africans, and there are geopolitical, issues that will affect the economy regardless. How much of that is going to play an influence? Because we're seeing right now, no one really knows what's going to happen with the tensions between Venezuela and the United States of America. There's also the Russian-Ukraine conflict where no one really knows whether a peace deal there would obviously indirectly have a correlation to the economies of the world. But how much of the geopolitical situation do we need to keep an eye on in terms of that? And of course, I forgot to add, our relationship with Washington right now, which kind of seems to be as sour as we can get.
Well, first of all, Venezuela, I'm not sure which way that's going to pan out. Obviously, it affects us through oil prices, what it does to supply and demand in terms of world oil prices. I haven't really looked into that. The second one is the Ukraine. So you have Venezuela, which could increase oil prices, the supply-demand balance, and then the Ukraine, which would be a net positive if that is resolved very quickly. And then the shock with the US tariffs. The majority of our exports to the US are exempt from the tariffs because, backtracking a little bit, I think they took out citrus and so forth, but it's still a shock to the economy. But I would say the biggest shock is not so much geopolitical. I've been watching this artificial intelligence bubble in terms of the Magnificent Seven stocks. They've spent this year $400 billion on these data centers. And nobody knows where the returns are going to come from. I believe maybe the the artificial bubble. It could be a repeat of the dot-com bubble. It could be a repeat of the global financial crisis of 2000, the dot-com bubble of the early 2000s, the global financial crisis. So I think that is perhaps in the next year or so, perhaps the greatest risk to our economy, because it could have knock-on effects to other sectors. If there's a crash on Wall Street, when Wall Street catches a flu, the rest of the world will catch a flu. Yeah.
Duma Gqubule, absolute pleasure having you on. Thank you so much for joining us. That's Duma Gqubule, independent economist, joining us just to give a debrief of the Stats South Africa decision of 0.5%. Well, that's all we have for you here on News in Focus for now, because after the break, we will be returning with a conversation with Zeenat Adam. She wrote a piece on Al Jazeera to discuss how Europe's migration policy, along with poorly regulated arms transfers, have fueled Sudan's civil war. So my conversation with her will have that after the break. Do stay tuned.